is the rupee, which is another class or an asset class which has been holding fort. In fact, at current reckoning, if in case we do breach that 60 level and we possibly even go to 59, it will be the first time that we do that all the way back since July 2013. So it's a huge amount of appreciation of close to 13% that we've seen from the August lows of around 68 that we touched also for the rupee. Jayesh Mehta, Managing Director and Country Treasurer, Bank of America, joins in with his view on the rupee. Jayesh, hi. Thanks very much for joining in. It's been a rapid upside that we've seen for the rupee, but would you be worried about the susceptibility the rupee might have to the FII flows, considering it's been so robust, especially in the month of March?
No, I think, yeah, if one feels one need to worry about the FI flows, then one need to worry about rupee too. I think it has a very direct correlation, and if you really look at it, year to date, we have got something like $3 billion of inflow, but most of it actually in March. And that has given the new sentiment and new high to, short-term high to rupee. And of course, it could have pierced the psychology 60, and that's where everybody's waiting. Maybe what comes first is some FII equity profit booking first, then breaking 60 would be difficult, or you might have one more big round of FII equity inflow before the election, and that can actually get it pierce 60 and maybe towards 59 temporarily. So that is purely dependent on the equity flows, which is as we go into election. And then of course post-election it is a different scenario altogether. But till it's, I think, from here to the election, yes, momentum is good. Doesn't look like, maybe even if temporarily some profit booking on equity comes in, that will have some impact on rupee, but not dramatic. But if you see one more burst of inflow in next 15 days, or even next 10 days, it can really go to 59.
Jayesh, hi, good afternoon. So what's the in-house view? What is Bank of America Merrill Lynch's own assessment of where the rupee might be pre-election? And secondly, if we do get a stable, government for the fourth time, if we do get that, then perhaps what would be the near-term target on the rupee after that?
Yeah, I think for the immediate thing, from now to election, we are looking at around 60. Of course, if we have some consolidated flows coming on the equity side, because it's directly correlated to the equity inflows. If you see big inflow in a in a bunched up manner on the equity side, then definitely it goes to 59. In the meantime, of course, it's well supported. Rupee at 60 is well supported by some of the guys actually booking their profit, or also to that extent it is Indian banks buying, thereby converting the central bank is actually building up reserve, which is good. So to that extent, it is actually building up its chest for an adverse situation. I think post-election is going to be little. I would say, if we get a good government, stable government, yes, rupee remains in this range, maybe can appreciate to 57 in maybe next 6 months. But if we don't get the right election verdict, then we would have a little bit of a situation on the currency, and that would be, which is in a way good that Reserve Bank is actually building up its reserves considerably, making it like a fortress reserves, what they are trying to build up, which is good.
Jayesh, is there any correlation with what's taking place globally for the Indian markets, or the flows that we're seeing at least into the debt as well as the equity segment, as opposed to just being an election trigger? And the reason I ask is that Indonesia is seeing the same sort of trend that the Indian markets are seeing. So maybe the Indian as well as the Indonesian markets are becoming more favorable within the entire emerging market basket, and hence that would be obviously predicated on elections, but also on improving macroeconomics, because we've seen Indonesia improve its current account deficit significantly as well. So would that be one of the reasons why we're also seeing these FII flows continuously? So if in case that is sustained even post-elections, it might not just stop, and maybe the rupee could possibly appreciate or currently sustain at the levels, maybe not at 60, but at lower levels, but still sustain?
No, I think, yes, global cues does help, but at the end of the day, I think people have been investing in India with a hope that things would change. People thought post-September 12, when the finance ministry changed, the things would change, but nothing really materialized. And again, right now, there is hope. There's even the new government will not have a magic wand to change things, but people are willing to give that time to new government. And that's where the flows will continue. I don't really see, if we get the right government and the right trajectory on the economic reforms, irrespective of what happens globally, maybe it will just calibrate the flow, but the flows would continue, and vice versa. If we don't get the right policies, the right economic growth framework, I think the flows would have a lot of, because there's a lot been built in anticipation of the right government, and that money at least will flow out. So I think that has to be a little bit, so I won't be completely saying that it is completely irrelevant whether which government comes and whether it's a fractured mandate or a consolidated mandate. It does matter, and it does matter big time.
Okay, Jayesh, if on policy day we do get a status quo, plus the RBI governor says that we will continue to monitor the CPI, then what could be the possible bond market reaction that we see?
Yeah, I think that's where people are worried. So it's multiple worries. So both the asset class doing well, but bond market still struggling. Of course, you have typical April, May, June, July with the supply. Irrespective of all this, that's a typical month of supply, but April normally goes pretty well. I think people are waiting for the cues from the central bank, and whether it is going to really chase inflation the way it has projected till now, or it is going to wait for the new government and then take a stance on where it will be the sole mandate of inflation targeting. So I think that's the cue people are waiting for. And of course, you have the auction calendar today, announcement hopefully today evening or so. So I think that is all playing in the mind, but hopefully if we get some sort of a clarity, even if it is the same stance or a little bit diluted stance, that's what market is expecting, we could see a good month for bond yield in April. Definitely, even if it is a pretty soft stance or a neutralist stance on 1st April, May, June is going to be a little painful for the bond yields, purely because of the supply which will be coming every week. So till the time, I think May, June is something to be watched for the bond yield.
Okay, Jayesh, I'm just going to quickly ask you a question on the government borrowing program. What is your expectation in terms of the total amount, front loading? What are you expecting today?
I think market's expecting something like 3,75,000 crores in first half, and maybe roughly around 2 lakh crore in the first quarter. So hopefully, but on that 2 lakh crore, you have almost like 65,000 crores of redemption. So net supply for first quarter roughly around 1,35,000 or so. If that comes, it will be in line of expectation of market. Anything further than that, is if it is front loaded, it's going to be hurting the bond yields.
Okay, Jayesh, we leave it at that. Appreciate you taking the time out and joining us.